Hi guys, and a warm welcome to 2026. I hope you guys are ready, and I hope you had a great festive season and a great new year. But yeah, be that as it may, folks, I think we've been through quite a few years now together, and in a nutshell, I would like to just thank those guys who are still putting in the work after such a long time, because I know this is a very difficult thing to do, being consistently in the markets, because most people, they come into this industry looking for immediate results, looking for immediate profits, and that tends to affect a lot of people. People come and go. Some, they come, they persevere, and then eventually they start seeing progress. There's quite a few of that in the group. So shout out to those folks there who have persevered in this endeavor, right? I do understand people got lives out there. I do understand people have got things to take care of, and if something does not work, it's in us, it's human nature. You leave it, then you go to the next one. But that's the difference between those who are going to eventually succeed and those that are going to keep on being in the same loop, going to this, going to that, You see, something that won't have progress that is I won't call it eternal, but progress that can sustain you for over a long period of time. So with Forex, I do understand a lot of people are struggling. A lot of people do get the concept, but applying them to real life scenarios, to real life charts, becomes an issue. Applying them in a manner where you constantly see progress becomes an issue, and thereby people tend to what? To give up. But I'm here to tell you guys that you shouldn't give up. As much as it's a very difficult profession, it's a very difficult thing to take on, I'll do my best to keep pushing you guys. Yes, it's very hard to see constant profits if you're not doing it the proper way. If you're not within the right mindset, you won't see progress in your trading, because you're going to be doing the right thing, but something else comes and disturbs your rhythm, or you'll be under pressure, or psychologically you're not ready for the losses. Psychologically you're not ready for the profits. You see a 20 pip, 60 pip, 100 pip move, and then you get excited. Yes, that's understandable. That's human nature. You get excited, and then the next time you get drawdown, then you're like, this doesn't work. You see? So yeah, I expect that. But be that as it may, guys, let's keep pushing. Let's keep persevering with this, and eventually you are going to get your aha moment one of these days, right? So coming back to the video, right? So today is what, the 12th of Jan 2026. Officially back into the markets now, and I've decided to do this forecast here, mainly DXY. I'm going to look at other assets, but it will be just like a summary after I've detailed my forecast, my yearly forecast for that matter. So it's basically a half yearly to a yearly forecast. So what I expect dollar index to be doing in the next quarter, 6 months, and the 12-month period. Now, the reason being that This is probably officially the first week where most of the institutions are now back into the markets, or some of them are going to come back into the markets. We are now going to see quite an injection of liquidity into the markets. Yes, there's been movement, guys. We cannot deny that there's been movement in the markets for December, and reasons to that is because of Trump and the government shutdown, Venezuela issue, all those things. They contributed to the volatility that we saw in December. It was one hell of a different December to the ones that we experienced before. So be that as it may, I'm going to do this forecast here, giving you a guideline on how you can approach trading in 2026, what I expect dollar to do in 2026, and also what can contribute to that forecast. Right, so it's basically mainly going to be technical at this moment in time. Yes, there is fundamentals that are happening somewhere else, but this focus is going to be based mainly on technical analysis, right? So with that said, my focus for dollar index this year, I expect dollar to be under immense pressure. Just like last year, I expect dollar to be under immense pressure. As you can see, right, this is 2025, this candle here. This is 2025 candle, and you can see how bearish it is, right? And since the beginning of last year, we expected dollar to trade to the downside. So this is 26, and we have a new candle. This is 2026, and this bearish candle is 2025, which is what we anticipated last year. We expected a bearish dollar, right? Now, when you look at the range, when you look at the chart where we are currently in terms of dollar index, technically speaking, you can see there last year, this is where dollar found resistance, right? This bearish OB, this is where dollar found resistance, right? And it pushed to the downside. So for your positional traders, right, your swing traders, maybe positional traders, let me put it that way. For positional traders, last year was actually a very good year, and to those swing traders who would have got dollar index somewhere around 108, 109 level, last year would have been a very profitable year for them, because the move to the downside, this drop here to the downside on dollar index, it will also means assets like the majors will gain strength against dollar, right? So dollar found resistance right around the 108, 109 price levels, and it pushed to the downside. What was the motive? What was the aim for dollar to do that? The draw on liquidity from the bearish OB would have been here, right? You see this gap here? That's where dollar would have been drawn, and that's exactly what price did. Price filled up the imbalance from 2022, 2021 periods, the COVID years. We had price move to the downside, meaning IPDA achieved its mandate. IPDA achieved its price delivery, what it was intended to do during the calendar year of 2025. Open, expansion to the upside, find resistance, and push to the downside, fill up the imbalance. Then now it found support and pushed to the upside, right? Which is pure, perfect price delivery, right? That's perfect price delivery, something that you need to see as a technical trader. Now we've got 2026, market opened right just around 98 price points. Market opened. What do you think is the intended price delivery that you should anticipate in 2026? You anticipate price to fill up the imbalance, right? You can see we've got imbalance right there. Now take note, this is a yearly technical chart. So each candle is 1 year. Take note of that. Each candle is 1 year. So we expect price to fill this imbalance. And once it fills this imbalance, what do we have up here? A high probability bearish order block, right? But now this is a yearly candle. Take note of that. It's a yearly candle, meaning you're gonna need to drop down to lower time frames for you to what? To define levels where you should get interested, say in dollar trading to the downside, right? So this is the yearly technical chart, right? The fair value gap, we expect price to fill up the imbalance. Once price fills up this imbalance, then you need to align the technical chart to the fundamentals. By the time price is filling up the imbalance, what should you anticipate in terms of fundamentals? You anticipate negative news for the dollar so that it finds pressure and trades to the downside. In terms of targets now for dollar, what should be your target? Last year's low should be your first initial target. If you're going short, if you're anticipating dollar to find pressure, this is the draw on liquidity. That's where price is going to trade to. This should be your draw on liquidity. So in terms of the draw on liquidity, last year's low, which is coming around 96 price level, that should be your what? Your target. See? That should be your target. And ultimately, right, depending on how the year goes, depending on what happens, fundamentally speaking, ultimately you should be looking at the lows of 2021 and the lows of 2022 as your draw on liquidity, as your yearly targets, right? Now it might look like a smaller price move, right? This might look like a small price move, but remember, it's a yearly chart, right? It's a yearly chart, and there's big moves that can happen inside that that price action, right? So in a nutshell, this is what I'm expecting dollar index to do. I'm expecting dollar to trade back into premium. Once it trades back into premium, it should move to the downside. Price should find, say, move to the upside into this fair value gap here. Then it moves towards the lows of 2026 as the first target, right? This is what I expect dollar to do, right? Now, this is the yearly outlook, right? The moment we go on to the next lower time frame, right now we're on the 12-month time frame. When we go on to the 6-month time frame, you can now clearly see, the price action that has happened, right? You can see the first 6 months of 2025, the second 6 months, the first 6 months we had a big drop from Jan all the way to the end of June. Then you can see the July, the open of July, price rallied back to fill up the imbalance that was created by the first 6 months of 2025. Now we've got the first candle for 2026. So we are expecting 6 months into this candle here. Where do you think that 6-month candle is going to trade to first before price can find resistance? Probably taking out the liquidity above the July 2025 candle, the last 6-month high of 2025. We expect price to trade above that and move to the downside. Take note, guys, like I said earlier on, this is going to be more of a technical analysis, a technical perspective outlook on dollar index, right? This also becomes your draw on liquidity, because we're now on the 6-month price action candle. This favor gap becomes your draw on liquidity, right? This should be clear, guys, for most of you guys who are using SMC concept, who are using institutional order flow. We've got this bearish order block from the year 2024. The bearish order block from the year 2024 has got 2 green candles, 2 up close candles, and then we had 25 move to the downside, validating these 2 green candles as our OB. So whenever price trades into these last up close candles, you anticipate price to find resistance, and coupled with negative fundamentals for dollar. We already have one that came out, I think, during the weekend. Powell and Trump, you see, the federal agencies, they're going after Powell. I don't know what he has been charged for. This, like a whole bunch of things that are happening, and that can only give you more evidence of shorting dollar index. Thereby, you're going long on the majors such as Euro USD, Pound USD, NZD USD, and AUD USD, and vice versa. You're shorting USD CAD, you're shorting USD CHF, you're shorting USD JPY. As you can see here, they're all negative on the start of the day, and the other 4 that I mentioned, Euro, Pound, Aussie, NZD, they're positive to start the day. Gold, we've created a new high. I think we've already crossed the 4,600 per ounce price level. So you can now see that with DXY trading into premium, anticipate price to find resistance and push to the downside. Now this is more of positional trading so far, right? You're not gonna scalp this type of time frame, no ways. This is more of positional trading. By the time we get to the 3-month candle, it becomes more of a swing trade, right? You see what happened between October highs and July highs. That's what I'm anticipating the current candle to do, right? You can see the October high, we ran stops above the July highs, right there. See, right there. Liquidity sweep, and make it a habit, guys. Always take positions after a clear liquidity sweep. That way you are giving yourself a high probability chance that the trade will pan out in your favor, right? So that's a liquidity sweep, which then validates the high of October being a protected stop. You see, meaning you don't anticipate price to trade above that level. If it does, then wait for the liquidity sweep for a close below within those 3 months. Wait for a close below before you short dollar index, with your targets set at 1 last year's low, 96.2 something, right, to the imbalance on the 6-month low, or basically the 2022 loss, which is right there. Now this is more of a swing approach. So the further you go on to lower time frame, it should then be more clear on what you anticipate as price moves. So you can see there on the monthly chart, we've got a bit of a consolidation, right? We've got a consolidation on the monthly chart. We had this initial drop of 2025. Now market is consolidating again, building up positions for the next expansion, which is most likely to be to the downside. It's probably gonna mirror this move of 2025. We're going to have a mirror image after this consolidation here. So we've got our drop, we've got our base. Now we should anticipate another drop. That other drop, when should you start anticipating it? After prices ran liquidity above the 100 level. Now remember, the 100 level, it has always been our point of focus in the mentorship group. If price trades and close above, then we should anticipate these imbalances here to be the draw on liquidity. But if price struggles like what it has been for the second half of 2025, price has been struggling to close below 100 level, right? You can see the July we closed just above 100, that was 0.57. August we closed below, October we closed below, November we closed below, price pushes to the downside. August close below, price pushes to the downside, clears the liquidity, and then we created the low of the year. And then there was a correction to the upside, traded above 100, close below, boom, market moves to the downside for the rest of December. That's a swing position. You see, that would have been a swing position on dollar index, right? So you're talking of like 1,700 point move, right? That's a drop of nearly 2%, and that's big. You don't really get that much in dollar index, right? So that's the monthly chart. Now the challenge for you now, or let me say the assignment for you as a group, right? I can give you the skeleton picture, I can give you the skeleton focused, like what I've done already. So you should have an idea on how to approach your lower time frames. By the time you get to the monthly chart, like where we are now, which is now our main point of focus, remember MWD, that's our main point of focus when we're doing our analysis for intraday trades, for short-term trades, even for your scalps on the other assets. That should be your point of focus. You go to the weekly chart. We've already noted that we anticipate dollar to find pressure. It should be pressure on dollar this year, right? That is given. Mark my words, guys. Like I always do. Last year it was gold. I gave you guys gold to say no, gold is gonna go above 4.5, and by that time I think we're still trading around 2,800 an ounce. Then we eventually reached 4.5. Same applies to this year. The year before, I think it was euro, and then the year before again, I think it was USD JPY. So it's not that difficult to predict the markets using the 12-month, 6-month periods, right? Candles. It's not that difficult. It becomes a tricky scenario if you just go straight to a lower time frames without understanding what the higher time frame is telling you, right? So from a technical point of view, dollar should give you further evidence that it should go to the downside. Now this is now your weekly chart, right? Beginning of the year. This is the first candle for 2026, this green candle here, and it traded into that imbalance that we defined, I think, on the 12-month candle, 12-month or 6-month candle time frame. Traded into that. Look at the current year, the current candle, right? We just opened today. It's finding what? Resistance, and price is pushing to the downside. Let me show you what that means on, say, Euro USD, right? If you go to Euro USD, then you go, say, on the daily candle. You see this? That's a big move. You see? That's a big move. Even if I go on to, it's the same candle on the weekly. See? This move here. Worse, if you go to a lower time frame, there, that's your trade. See? These are the trades which you see most people like post on their socials. You see? Saying I've got a nice big move. It's not that difficult to catch that kind of a move if you do your analysis properly. It won't be about guessing. It won't be about taking chance. You will know that, okay, price is going to find support here, and then it's going to push to the what? To the upside. You will know. So coming back to dollar index, you can see the gray shaded area there. That's a level where you should expect dollar to find resistance inside the gray shaded area, right? For a swing trader, anywhere around the equilibrium point, which is 99.70, somewhere there, is an ideal entry for what? For shorts targeting last year's low. That's for a swing trader. But now if you're not a swing trader, if you're say a day trader, right, you go on to the next lower time frame, you define your what? Your levels. Now the previous chart was a weekly candle, right? This is now a daily candle, right? On the daily candle, you can see there we've got a what? A bearish OB, right? And price traded into the OB. Now it's pushing to the upside. Chances are very high we're still gonna come back to take out these two highs here before we can have, say, a sustained move heading towards, say, 97.7 or 96.2, which is last year's low. We still have to take out these highs here, right? Still have to, right? So the gray shaded area, even on lower time frames, you look for these last up close candles here. See, this is your last up close candle. Then we did expansion to the downside. Price comes back. This resistance. Scalpers heaven. That's a scalpers heaven level or zone. Let me put it that way, because it will result in longs on asset like AUD USD. You see, pound USD. Those are all longs and results in what? Shorts on USD CHF. Look at that. Shorts. USD CAD, right? Shorts. That's a daily candle. UJ. Shorts. See? Price moving to the downside. You go to a lower time frame. See? It results in shorts. Bearish moves. You go to CHF. You see? There's a move. Big move. A mirror image of that long that we saw on Euro USD. And price has reached a level where it's gonna find what? Support. Then starts pushing to the upside. So it's not really that difficult, guys, to frame your trade ideas. Once you have your higher time frame structures mapped out properly, it's not that hard. The only killer, the only difficult thing that we experience, that we get to have difficult in navigating as traders, is we need to be in positions almost all the time. We are not that patient, and that keeps a lot of people. So the lesson for the year, try to be patient, guys. Less is more. When you are trading, less is more. There's no need for you to be actively trading all the time. You are definitely bound to do something wrong, but less is more. You wait for big expansions at critical levels, at important levels. Then you see that, okay, you're going to start making progress. Use the 4-hour candle as your entry. Use your daily, use your weekly as your targets. Yes, there's nothing wrong in scalping. Right? There's absolutely nothing wrong, but do it the proper way. Scalp from an important level. Just don't scalp from anywhere. See, like now, that's this area here. That's our daily bearish OB. Let me just double check. Right, that's our daily bearish OB. You take your scalps from there on the 15 minutes or 30-minute time frame. You see, there. That's our daily, the gray shaded area. The one that's dark gray, that's the one that coincides with your yearly or 6-month fair value gap. And look how sensitive it was to price. Price came and then it did not spend a lot of time there. Boom, it expands to the downside. Now these are the levels that I'm saying, try to focus on those levels, because if you look at, say, Euro USD, see, this would have been the end result. Even if you don't get that whole 70 pip movement, right? Even if you don't get the whole 70 pip movement, but you should be in a position to get like this move here, probably maybe targeting, say, that that's a 36 pip move. That's a 47 pip move in 3 15-minute candles. So basically 50 pips, right? You do your maths. 0.5 lot size. You do your maths. 50 pip move, 0.5 lot size, 3 15-minute candles. That's 45 minutes. 45 minutes, 0.5 lot size, $5 a pip times 50. That's 250 quid. You see, 250 bucks. So yeah, that's something which you should aim for. Only trade from levels that are quite critical, important levels on the market. Just don't scalp from anywhere if you're going to scalp. But for your day trades, your swing trades, your short-term trades, try to stick to those important levels, and then you calculate your risk management properly. See, less is more. I repeat, less is more. So if we are looking for shorts on dollar index, if we are anticipating dollar to trade to the downside, we expect euro for the calendar year to trade to the upside. It's a mirror image of what I've just been talking to on dollar index. It's a mirror image. You've got a bullish OB, you've got a fair value gap, high probability. So you anticipate price to drop towards the $12. Price should drop towards the $12 before moving, targeting 2025 highs and 2021 highs. It's a mirror image. So longs on pound, longs on AUD, long on NZD, and longs on gold. So that's what you should anticipate for the year to give you. But as you go on to lower time frames, you see, make sure you keep that in mind. Keep this focused in mind when you go on lower time frames. Keep this focused in mind. So yeah, that's pretty much to start the year. I'm going to try to be consistent more in giving out these forecasts here, and also giving out more nuggets as the year progresses. So if you have any questions, you know where to send them, guys. Just send them on the group, and then I can attend to them. And if you are new to my channel, guys, we teach SMC concept here, institutional order flow, smart money concept. You can, if you are new, if you want to join the mentorship, just send me a message and we can communicate from there. And if you haven't subscribed to the channel, please subscribe. It doesn't hurt that much, so that whenever I drop a nugget, whenever I drop a tutorial, free tutorials and all that, you get notifications in your email. It's only the right thing to do, guys. Support local YouTube channels, right? So yeah, that's pretty much about it for today to start the year, and I wish you nothing but the best in your trading, guys. Thank you.